Welcome back, financial investors. My name is Brent, and today we're going to be doing our Monday buys video here on the M1 Finance Roth IRA platform. We're going to start this video looking at stock futures, which are currently positives. We're going to look at the S&P, the Dow Jones, and the NASDAQ. Also look at some of the current markets that are open. Then we're going to jump over into the M1 Finance portfolio, take a look at what stocks paid out dividends last week, the overall performance here for the last week, and also look at the stocks that were up and down and what helped us this week either move positive or negative. So if you are brand new to the channel, have not yet subscribed, hit that subscribe button below. If you do enjoy this video, find it helpful, hit the thumbs up. And if you have any comments or questions, have any ideas for upcoming videos going over the stock market, dividends, or real estate, drop it into the comment section below. I do read and reply to all your comments, and let's go ahead and get into the video. I'm going to go ahead and flip my screen right now, and we're going to start off by looking at stock futures. So up on the screen right now, we have the S&P 500 futures up on the side. Now, the market is currently looking positive going into Monday. Here we see the Asian stock market was up slightly, kind of waiting on the central bank's move here towards the end of the month. The S&P right now is up roughly 0.23%, the NASDAQ up 0.2%, and the Dow Jones also at 0.2%. So already, before the markets are even going to open, we're already up 0.25% here going into Monday morning. Now, the Asian markets, England and Germany, are currently open, with China down 0.03, England basically flat, and Germany also flat on the day. We do see crude oil there kind of ticking up here in the after hours. So very interesting to kind of watch this, and we'll see how the markets play out on Monday. They'll more than likely open up positive, and then everyone is sort of anticipating what exactly is the Fed going to do. A lot of investors, myself included, do believe that the Fed will cut interest rates by 0.25%. I've already seen Marcus and many other high yield checking accounts cut their interest rates back even further from prior to the Fed announcement. So back in maybe a couple months ago, maybe 3 or 6 months ago, the markets had cut their rate from 2.25 back down to 2.15%. Then a month later, the Fed announced a cut. And then just this last week or two, markets came out, lowered their rate from 2.15% to now 2%. So they're already cutting interest rates or high yield checking accounts back in anticipation for what the Fed will do. So the big bankers already know what is going to be taking place. Now, jumping over into the M1 Finance account, we're going to go ahead. We can see the current return is up 15.52%. This is a money weighted return here, meaning that however much money we have invested ourselves, this is taking the current dividends that this account has earned. It's also taking the dividends that it has generated, and it's been taking the equity gains that we've had, so it's our sort of return that our money has had since it's been invested in the market. We can see that our market gains are currently $852.04, and this number right here, market gains, that fluctuates up, it fluctuates down, it can go positive, and it can go into the negative. Now, the earned dividends, that continues regardless of whether the market goes higher or lower. The stocks within the account, they will generate dividends that get paid out within this account, and those dividends here, we have cash of $11.43 sitting in the account, and that is because this account has many companies that pay out dividends. Now, looking at the 1 week performance here, we can see we are up roughly 2.11%. Now, that is because we did generate earned dividends this week, and that plays a part towards the total return, even though we have not been paid those dividends. Now, the stocks that performed the best this week, we have Stanley Black & Decker up 5.94%, Las Vegas Sands up 3.32, Cisco bouncing back from those lows. I believe it lost roughly $10 or $15 from the highs of $57 and has slowly came back. Caterpillar and 3M making that 2.4 and 3% return there. That is because of the trade talk has been positive here these last few weeks, and this last week was really good here on Wednesday, really amped up the market. And some of our worst performing positions were AB Industries, down 3.57%. Now this one has been really high flying. Kimberly Clark, which is also very high up in there, and Real Estate Investment Trust, WP Carey, has been hitting some 52-week highs recently, so it is expected for it to take a breather here. Last week it lost roughly 1.33%. Walmart, Altria, of course, in the news, constantly kind of getting hammered here over the short term with regulations from California and what could go on with them in the future. We can see here overall we've had much more green versus red, so that's pretty good, and that's why this portfolio is up for the week. Now, looking at the activity here, last week we did make a buy here. We had two buys. If you tuned in last week, we had Las Vegas Sands and we had Altria there, so those were our two positions. We added $115.38, plus we had a couple dividends that paid out. Now this week we have Pfizer that paid out $4.13. We have Walmart, which paid out $3.43, and we have the Southern Company, which paid out $3.87 for a total of $11.43. Now we're going to be adding our $115.38 this week, so that will go all into the market here on Monday. Now jumping over into the spreadsheet here that I use to track this account and the performance, as well as the dividends and when they're going to get paid out. Now this matches right along with my holdings. Down towards the bottom, you'll see my cost basis is $15,883.17. So as I kind of scroll here, and my cost basis of all these positions is $15,883.17. Now my cost basis is not how much money I've actually put into this account. I've only put into this account my base investment, which can be seen in the funding history. If you added $11,000 and $4,269, you would have a base investment of $15,267.06. So if we take what our current original cost, like our cost basis of our current portfolio, and we subtract out what we've actually deposited ourselves, we can see that we have $614.11 that's unaccounted for. This has been generated in dividends from this account. So $614.11 has been made from either dividends getting paid out into the account, or those dividend stocks that were purchased with dividends have also appreciated or had capital dividend distribution, which has made this kind of portfolio compound. So you're going to see this process into the future. You're going to start to see our cost basis begin to it's going to increase over our actual base investment, because our base investment, this is a Roth IRA. This could only have $6,000 here in 2019, and last year it was $5,500. So you're going to see this slowly build larger than it was capable, because it's generating dividends within this account, which does not go against its limit for the year. So that is very nice. Now, as far as what stocks I am planning on buying this week, I am going to zoom out a little bit, because it does help me out here when looking at this. I'm sorry for you guys out on the mobile devices. Now, I do have these ordered here by when these positions are going to go ex-dividend. Here down towards the bottom, we have Digital Realty Trust. This one's going ex-dividend on the 12th of September. That is on Thursday. Now, this position is up 15.07%, so I'm not too interested. I would be buying it at a 3.36% yield versus where I bought it at a 3.91% yield. We also have Altria. I just added to Altria last week. I wanted to get it over that $700 cost basis, which was my goal. I am not going to be touching Altria at this time, even though it is down 28.42%. I'm going to let this one sit. It'll generate me $10.17 on the next payout. When it goes ex-dividend, I would have earned $10.17, which will get paid out to me. The next one down is Las Vegas Sands. Now, this one was down in the account roughly 4% last week, but Las Vegas Sands, ticker symbol LVS, has done really well. Here we can see just last week alone, it is up 3.32%. So the money that I put in there last week, it was down roughly 4 to 6%. That lowered my cost basis, And with that 3.3% gain last week, it basically almost nullified my loss there. But I was able to lock in a very nice yield. Now, it is still down in my portfolio. It is not to that $700 cost basis that I want it to be at. So I am going to be targeting Las Vegas Sands. Now, another one that is coming up on next dividend that I do want to be adding to, Main Street Capital. I would really like to add to this one, but it is currently up 14.44%. So I'm going to give it some time. It may pull back here in the future with these REITs kind of pulling back. That would be really nice in my favor, in my favor as far as it pulling back. Now, the other one here that I'm kind of looking at is Cardinal Health. This one has $654 of equity that I've invested towards it. I would like this one to also be over that $700 limit. So it goes ex-dividend here on the 30th of September. So I actually have quite a while. I have 2 more weeks. I can go ahead and add my 115.38 currently towards Las Vegas Sands this week. And then I still have 2 more weeks to target Cardinal Health. Whereas if I added to Las Vegas Sands, it goes ex-dividend on the 17th. That is next Tuesday. I could actually add to Las Vegas Sands twice in a row and then still be able to hit my goal of maxing out Cardinal Health at $700 by the 3rd week. So I think I'm going to go ahead and hold off on Cardinal Health, and I'm going to mainly focus here on Las Vegas Sands this video. So in order to do this, I'll just go back to my portfolio here within the M1 Finance platform. I'm going to go ahead and sort this. So Las Vegas Sands is right there. Go ahead and select it. Go ahead and go into the buy sell. Now this will just be a single buy. So I'm going to go ahead and target I have $115.38 that I'm going to be depositing. Plus I have $11.43 for a total of $126.81. So I'm going to go ahead and punch in 130. That way it just puts in everything I'm going to be adding. Plus I don't expect any dividends getting paid out tomorrow. So that'll be fully invested on Monday. So that is essentially all I wanted to cover in today's video. We covered stock futures, which are currently looking positive there. The market should do well. This will probably be my last opportunity at this time to kind of buy Las Vegas Sands, where it is down 1%, lowering my unit cost, increasing my yield on cost, and also increasing my dividends going forward. So here in the next week, I could expect my dividends here for Las Vegas Sands. My last week's purchase of 105.24 increased my annual income by $5.97, basically almost $6. So my $130 that's going in this week, that'll increase it by another $7 roughly. So that is very nice. Another $1.50 per quarter there just from this upcoming purchase here on Monday. So that is it for today's video. If you guys did enjoy this video, hit the thumbs up button below. If you have any comments or questions for me, or you would like to see a video covered here on the channel going over the stock market, dividends, or real estate, let me know in the comment section below. I always appreciate all your guys' feedback, all your comments that you do leave here on the channel. And of course, if you have not yet subscribed, I would highly appreciate if you do hit that red subscribe button below. It really helps out the channel. And of course, I would like to have you here on the channel. So that is it for today's video. Thank you all for tuning in. I will see you next time. Have a great day. Bye.